Well, thanks very much. It's great to be here. I was invited a couple months ago and just jumped at the opportunity. It's been a while since I've been, first of all, in Ireland, and last time I was here I had such a nice time, so it's really great to be back. There's certainly a lot going on, and I think as I began thinking about these comments 2 months ago, certainly there are things like reforms in the Common Agricultural Program to think about, the U.S. Farm Bill, which is we've begun debate on in the U.S. We have a ministerial in Argentina for the WTO later this month, but obviously the two things that have been at the top of everyone's minds is what's going on with Brexit, and that's been certainly a concern in the U.S. as well. And then lastly, the new presidency in the U.S., which has certainly kept me busy over the last year, as there's been a lot of talk from the Trump White House about pulling out of trade agreements like the North American Free Trade Agreement or the Korea-U.S. Free Trade Agreement, and even things like pulling out of the WTO. And I think these have all been clearly things that would have very dramatic effects for the U.S. and I think as the world as well. And I'm going to deal with a lot of these at a pretty high level of generality, at least. And I presume that a lot of this will get into more discussion when we have time. But first, let me just talk a little about some of the key things, and that's GDP growth, which has been actually pretty good, I think, considering we're finally beginning to see a little bit of growth worldwide. I think despite the problems here in Europe with Brexit and other things and despite the problems that we had with some of the southern European countries, that growth has begun to recover a bit. In the U.S., we're beginning to see signs that we're, certainly the labor market unemployment has come down, and all that looks very, very good. If you look at overall, of course, where the drivers in world trade have been in Asia, primarily China, but also India as well. There, again, they've come down from those 10% per annum growth rates that we saw 10, 15 years ago. Since the global recession have declined a bit, but still are strong and still show signs of driving a lot of, I think, the big trends that we see in agriculture, particularly the move towards consumption of meats and dairy products, both with increased population, but also primarily increased income. And there we've seen that not just in Asia, but in other parts as well. But I think still, if you look at where most of the growth has come from, and I think where most of the growth will continue to come from over the near term, is China. And I think China, again, there's a lot there that continues to grow and to be very good signs, despite a weaker economy than what we saw maybe 10 years ago. If you look at global consumption and here let me start with the grains. That little red line is what the global population growth rate has been per annum, and you can see that for the most part over the last 15 years or so, that production, the growth in demand exceeded that, and largely because of things. One is that not just population is growing, but also obviously the shift in income. Because of increased income, the shift in diets. So you are seeing more feed grains being consumed. As we look forward, I think we'll see probably a slip back of things of the food grains like rice and wheat, but still some very strong growth for feed ingredients. So corn or maize, again, continues to be very strong growth, and soybeans in particular, which have shown just dramatic growth over the last 15 years, still continue to be very, very strong. If you look at import penetration, that too has been a very important factor. If you look at the last 15 years, for most crops and for most products, things like vegetable oils, meats, et cetera, you're seeing very, very high, you're seeing an increase in import penetration rates. And just looking at USDA's 10-year forecasts and also looking at OECD, FAO 10-year forecasts, these trends are expected to continue. And indeed, I think if you look down the road at as many of the longer-term forecasts have looked at 2050 and beyond, I think it's very clear that there's areas of the world where we're going to see increased production, where the real supply centers are in the world, and yet they aren't necessarily coincident with where we see the great big increases in demand. And because of that, trade, I think, will become even more important. For dairy, I think that's been slightly, you can see where the powders, I think in particular, have been holding very, very strong. Again, this is with actual trade has increased because of population growth. Butter, and again, some of this reflects the fact that we have seen some major policy reforms both in the EU and the US, where both of those countries had pretty large support policies where some of these products would end up on world markets. That being largely reformed now, I think where we're seeing a lot of the trade and the competitiveness, of course, has been in the, well, cheese continues, but then also both whole milk powder and skim milk powder. If you look at trade and dairy products, and again, this is what we've seen over the last 15 years or so, and looking at that moving forward, at least if you look at USDA's 10-year forecast, still showing some growth in those areas, particularly, again, as I say, in the whole milk powder and skim milk powder areas. The other major factor has been sort of the ebb and flow of the dollar. That we saw very, very strong exports from the U.S. When the dollar was just particularly right after the recession. The dollar was very, very weak, and then we saw this big strengthening over the last 3 or 4 years. That has begun to fall again, and again, the question is, where is that going over the next? People still point to the fact that the U.S. economy is still relatively weak. However, I think with the strength that we've seen recently and the fact that we're likely to see 3 to 4 interest rate hikes over the next year, I expect that the dollar will still remain higher, certainly much higher than it was than what we saw 4 or 5 years ago. And then the other thing has been energy prices, which have been both with the strengthening of the dollar and then just the weakening first of the Chinese economy and other economies around the world. The demand for oil softened a bit, but the big thing was the fact that there's been supplies that have come on. We've seen a lot in the U.S. in terms of shale gas production and shale oil production. And conversion of a lot of things in the U.S. to natural gas, such that the overall demand for energy declined. That was a big part of that fall. But we have seen some strengthening recently, again with the pickup of the economies. We're seeing that if you look at not just energy prices, but also fertilizer prices have begun to shoot up again, and again, this is from a farmer perspective. Of course, this cuts into the bottom line a bit and is some concern. But we also see this overall movement of prices where we have seen food prices, at least over the past several years, move together. That has begun to break a bit, and I think largely because we have just such large supplies in the global market right now. That is large supplies of grains and oil seeds. And those have kept prices down, I think remarkable in terms of just global record crops year after year, which has allowed stock levels to build up and keep prices relatively low. And so we have begun to see a bit of a break with energy. Whether or not those will rebound and regain their correlation over the next year or so remains to be seen. But I think as long as stocks are still very, very high, at least we should see prices still pretty dampened. Then lastly, just talking, last of the charts on prices and others, we've seen for the food price index come down a bit. Again, not nearly down to where we were in the early 2000s, but down pre to that big price spikes that we saw in 2006 through 2009 or so, and then again peaking at 2011 when we saw wheat prices and maize prices and oilseed prices hit nominal highs at least. Again, they seem to have flattened a bit now, but again, the long term, obviously these things have declined once accounting for inflation, and that's largely reflected productivity growth. If you look at just meats, dairies, and the cereals, again, you can see some, we have seen some rise with dairy, obviously, but again, meats and grains largely flat. Lastly, again, as I mentioned, I think there's a whole number of issues that I will likely come up today. I think the growth of global supply chains has been very, very important. I look at something like the integration of markets. Clearly, this is an issue now, looking at something like Brexit or the U.S. pulling out of the North American Free Trade Agreement, where so much material food products and other things are being sourced in other countries, being processed in the domestic country, and then even exported again. To unwind some of that and try to think through on how that might, what that might mean, it will be very important. Obviously, a lot of consolidation going on as cost margins are getting very, very thin, and to the degree that one can take advantage of scale economies, we've seen that. In the States, certainly e-commerce has been, we see that more and more in the food marketing business, and I think everyone's trying to figure out how far will that go. The fact that people are now ordering groceries and other things online, how much of that will have an impact. I'm sure we'll have plenty of time to talk about consumer trends. And then, obviously, let me just close with the threats to the world trade system, because I think obviously, we've seen this long 70-year run from the creation of the GATT, and where we've moved away from a lot of the protectionist policies that were in place, certainly prior to the Second World War, and then with multiple rounds within the GATT, leading to the creation of the WTO, leading to reforms not just on agricultural tariffs, but also critically on domestic support, and also elimination of export subsidies. All those have been great things and things that have really helped, but I think there's a real threat to some of that being turned around now, as people are, again, threats of pulling out of free trade agreements and other things, and even legitimacy of the WTO being questioned in some parts. With that, let me close and look forward to the rest of the day. Thanks so much.